Ever wondered if your bank is working harder for itself with your money than for you? Plot twist, it probably is. Banks use the money you deposit, your hard-earned cash, to make loans. They charge interest on those loans. They make a tidy profit. It's a fundamental part of their business model. Many people just see their bank as a place to store money. They don't realize the full extent of this activity. It's kind of like leaving your car in a lot, and the attendant rents it out without you knowing. It's time to wake up and see the bigger picture. Think about it. Your checking account might be earning a tiny fraction of a percent, if it earns anything at all. Yet the bank is lending out those collective deposits. They might be earning 5%, 10%, or even more on car loans or mortgages. That difference, that spread, is where they make a huge chunk of their revenue. It's not a scam, it's just business. But understanding this is the first step. It's the key to flipping the script. You need to know the game to play it well. I knew someone, let's call her Maya. Maya worked hard. She saved a bit each month. Her money just sat in a basic savings account, it barely grew. She felt like she was doing the right thing by saving. But her money wasn't really doing anything for her, it was just there. She thought banks were just safe boxes. She didn't realize they were active players. She was missing out on potential. This is a common story for so many people out there. But then, Maya had a revelation. She started asking questions. She started looking into how banks really work. She realized she could be more active. She could make her bank work for her, not just the other way around. It wasn't about fighting the system, it was about understanding it. It was about using the tools banks offer, but using them strategically. This shift in mindset was the beginning of her financial turnaround. You can make this shift too. It's simpler than you think. One of the simplest yet most powerful ways to flip the system is automation. Set up automatic savings. Seriously, this is the golden rule. Pay yourself first. Before you pay bills, before you buy that coffee, a portion of your income should go straight to savings. It's like a magic trick. Money appears in your savings account without you even thinking about it. You decide the amount. Even a small amount, transferred regularly, adds up faster than you can imagine. This builds a fantastic habit. Imagine this. Every payday or every week, a set amount, say $25 or $50, zips from your checking to your savings. You barely notice it. But after a few months, you'll see a real difference. After a year, it's significant. This isn't about restricting yourself, it's about prioritizing your future self. It's putting your financial goals on autopilot. Most banking apps allow you to set this up in minutes. It's a set it and forget it strategy that works wonders for building that emergency fund or saving for a big goal. Next up, let's talk account types. Not all bank accounts are created equal, far from it. Your everyday checking account is great for daily transactions. Paying bills, using your debit card, that's its job. But it's usually terrible for growing money. The interest rates are often laughably low. This is where a high-yield savings account, or HSA, comes into play. These accounts are specifically designed to help your money grow faster. They offer much better interest rates. So the strategy is simple. Keep enough in your checking for your monthly expenses. Then, sweep the rest, especially your automated savings, into a high-yield savings account. Your money starts earning more money, compounding over time. Some online banks specialize in HSAs. They often offer the best rates because they have lower overheads. Don't just let your savings languish. Put them in an account that gives them a fighting chance to grow. It's a small change with potentially big rewards. Alright, so, you're automating savings and using the right accounts. What's next? You need to know where your money is actually going. You need to track your spending. I know, it sounds like a chore. But trust me, it's an eye-opener. It's like turning on the lights in a dark room. Suddenly, you see everything clearly. You can't manage what you don't measure. This is fundamental to taking control of your finances. Most banks now offer built-in spending tracking tools. Check your bank's app or online portal. They often categorize your transactions automatically. You can see how much you're spending on groceries, entertainment, subscriptions, and so on. If your bank doesn't have great tools, there are plenty of free budgeting apps out there. The goal here isn't to make you feel bad about your spending. It's about giving you information. Knowledge is power, especially when it comes to your money. Once you see where your money goes, you can make informed decisions. You might be surprised. That daily coffee habit, those multiple streaming subscriptions you forgot about, they add up. Seeing it in black and white or a colorful pie chart can be incredibly motivating. You might spot areas where you can easily cut back without feeling deprived. That extra money can then be redirected, maybe to boost your automatic savings, or to pay down debt faster. This tracking isn't about becoming a super frugal hermit. It's about being intentional. It's about becoming the CEO of your own finances. You decide where your resources are allocated. When you know your spending patterns, you can also set realistic budgets. This helps you stay on track with your financial goals. It makes saving less of a guessing game and more of a planned success. You're no longer passively letting money flow out. You're directing it with purpose. Now for a little twist. A bank feature that many people overlook, but it can be a game changer. I'm talking about customizable alerts. Not just the basic low balance warning. Many banks offer much more sophisticated alert systems. You can set alerts for specific transaction types, or when a spending category hits a limit you define, or when large deposits or withdrawals occur. This is like having a personal financial assistant watching your accounts. Think about it. Set an alert if your dining out category goes over $200, or get a notification every time a subscription renewal hits. This isn't just about avoiding overdraft fees, it's about proactive financial management. It keeps you constantly aware of your financial activity in real time. It can help you catch fraudulent transactions faster. It can also help you stick to your budget by giving you a nudge when you're nearing a self-imposed limit. Dig into your bank's settings, you might be surprised. This level of customization puts you in the driver's seat like never before. You're not waiting for the end-of-month statement. You're getting live updates that empower you to make adjustments on the fly. Maybe an alert tells you you're spending faster than planned in a certain category. You can then consciously decide to rein it in for the rest of the month. It's about making small course corrections that lead to big results over time. This is using the bank's tech to your advantage, so you've learned to make your money work for you. You're automating, using the right accounts, tracking, and now using advanced alerts. You're well on your way to flipping the banking system in your favor. But guess what? There's even more. We've just scratched the surface. Next time, I'll share an even smarter hack. It's a way to potentially leverage your bank's own products against them, in a good way, to boost your returns even further. Stay tuned for that one. It's a real game changer.